Hello, and welcome to Daily Nexus Update, Daily News Brief. Today is Monday, 15th June, 2026. Today's briefing covers 5 stories across geopolitics, finance, tech, crypto. Let's get into it. First stop, geopolitics. Next, geopolitics, where every sentence has footnotes and consequences. The European Commission is launching a new framework to secure its supply chain for critical raw materials. This move follows our recent coverage of the finalized duties on Chinese electric vehicles, marking a broader shift toward economic independence. The goal is to reduce reliance on non-EU suppliers for rare earth elements, which are essential for modern tech. By streamlining the permitting process for domestic mining and recycling projects, the Commission aims to strengthen the backbone of European manufacturing. This initiative is a direct response to the urgent need for stability in producing wind turbines and electric cars, sectors that have faced significant supply hurdles. As the continent pivots away from external dependencies, this policy creates a faster path for local production to meet the growing demands of the green transition. Trade representatives have officially resumed negotiations on the EU-Mercosur agreement, marking a significant push to finalize this massive deal. Following our recent reports on the Commission's assertive stance toward Chinese electric vehicle subsidies, this move signals a broader shift in how Brussels manages global trade partnerships. The current focus is squarely on sustainability. Negotiators are working to ensure South American agricultural exports align with the European Green Deal's strict deforestation regulations. These rules require products to be sourced from land that hasn't been cleared of forests. It is a delicate balance, as Europe seeks to secure its food supply while upholding its environmental commitments. This remains a critical geopolitical development, testing whether the bloc can successfully bridge the gap between open trade and its own climate goals. Quick pivot from geopolitics to finance. Time to check the markets, where charts can move faster than coffee cools. Retail sales across the Eurozone climbed by 0.4% in May, marking a notable shift in how households are spending their money. This latest data from Eurostat provides a crucial update to the industrial production trends we tracked earlier in the second quarter. It suggests that consumer confidence is finally beginning to thaw, following the recent interest rate adjustments by the European Central Bank. As a follow-up to our earlier report on the ECB signaling further easing, this uptick indicates that lower borrowing costs may be starting to encourage shoppers to open their wallets again. While the recovery remains gradual, this increase serves as a key indicator that the broader economy is finding its footing. The path forward for household consumption will be a vital metric to watch closely. Quick pivot from finance to tech. From microchips to macro consequences, tech never really does quiet mode. The European Parliament has finalized enforcement protocols for the Cyber Resilience Act, marking a major step in digital security. Following our previous coverage of the digital sovereignty framework, this move tightens the rules for the tech industry significantly. From now on, every connected device sold within the European Union must meet strict, mandatory security standards. This applies to everything from smart appliances to complex industrial software. The policy impacts both local European tech firms and global importers looking to sell their goods in the region. By setting these high bars for hardware and software safety, the EU aims to protect consumers from emerging digital threats. These new protocols ensure that security is built into every product from the very start. Quick pivot from tech to crypto. Now to crypto, where volatility still treats calm as a temporary bug. The European Banking Authority has just released new, specific capital requirements for crypto asset service providers, a move that serves as a direct follow-up to our previous coverage on MiCA technical standards. These rules mandate that crypto firms operating within the European Union maintain robust liquidity buffers. Think of these buffers as a financial safety net, designed to ensure companies have enough cash on hand to handle market volatility and protect retail investors from sudden collapse. By setting these clear, mandatory thresholds, regulators are aiming to bring a new level of stability to the digital asset market, effectively mirroring the protections found in traditional banking. This framework marks a major step forward in creating a safer, more predictable environment for everyone involved in crypto. Diplomacy moved carefully today, which is rare enough to deserve a drum roll. If you want the next roundup, subscribe to Daily Nexus Update.